Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's time to dive into the latest action on Wall Street. We've got a packed day with major market moves, growing concerns around AI's impact, and some hot earnings updates. So, grab your coffee, and let's break down what's driving the markets for us long-term investors while keeping an eye on the short-term waves. Let's kick things off with a look at the major indexes. It was a rough day across the board as the Dow Jones took a significant hit, dropping over 500 points, while the Nasdaq and S&P 500 also slid, with tech-heavy names dragging the markets lower. The Russell 2000 wasn't spared either, seeing a steeper decline percentage-wise. Volatility spiked, with the VIX jumping, signaling some serious investor nerves out there. This pullback seems tied to broader worries about AI disruption and hotter-than-expected inflation data. On the brighter side, we've got some standout performers among large-cap stocks. Dell Technologies soared with a massive gain after smashing earnings expectations, fueled by a surge in AI server shipments. Netflix also caught a nice updraft, likely benefiting from dodging a pricey acquisition deal. Healthcare names like Merck and Gilead Sciences climbed as well, offering a bit of a safe haven amid the tech storm. These moves show pockets of strength for us long-term folks to consider. But not everyone's celebrating. The financial sector got hammered, with heavyweights like Goldman Sachs, American Express, and Bank of America posting sharp declines. This could be a reaction to broader economic uncertainty and falling treasury yields, which often spell trouble for bank margins. It's a reminder to stay diversified and not overcommit to any single sector, even in choppy short-term waters. Looking at the big market movers, Nvidia saw heavy trading but ended lower despite its AI dominance. Investors seem to be questioning lofty valuations. Apple and Microsoft also faced selling pressure, while Amazon and Alphabet managed to eke out small gains. Tesla slipped a bit as well, with ongoing concerns in China weighing on sentiment. These names are the pulse of the market, and their mixed performance reflects the uncertainty we're navigating. Diving into the most active stocks by volume, Nvidia again led the pack with massive trading activity, underscoring its central role in the AI narrative. Netflix saw high volume too, likely tied to the news of walking away from a major deal. SoFi Technologies and American Airlines were also buzzing, though with notable declines, hinting at speculative selling in those spaces. High volume often signals where the action is, even if it's not always positive. Now let's talk about the elephant in the room. AI fears are dominating headlines. There's growing anxiety about AI disrupting jobs and entire sectors, with Block's massive layoffs, 40% of its workforce stoking the flames. CEO Jack Dorsey's blunt comments about AI transforming work aren't helping calm nerves. Software stocks are getting crushed, with concerns about a so-called SaaSpocalypse hitting valuations hard. But here's the flip side. Some analysts argue this sell-off might be overdone, pointing to historical trends where emerging tech transforms rather than destroys industries. For us long-term investors, this could be a buying opportunity if we pick the right innovators. Zooming out to the broader economic picture, inflation data came in hotter than expected, with wholesale prices rising more than anticipated. This is rattling markets, as it could delay Federal Reserve rate cuts, something many of us are watching closely for portfolio impacts. Geopolitical tensions and tariff uncertainties are adding fuel to the fire, keeping risk-off sentiment alive. Tech, in particular, is feeling the heat. The Nasdaq is staring at its steepest monthly drop in nearly a year, driven by AI unease and high valuations. Even strong earnings from leaders like Nvidia couldn't spark a rally, showing how sentiment can override fundamentals in the short term. As long-term players, we need to look past this noise and focus on companies with durable competitive edges. Shifting to earnings, it's a busy week with some big names reporting. Dell Technologies already knocked it out of the park, with shares jumping on AI-driven growth. Intuit also beat expectations, showing strength in its segment. Looking ahead, we've got reports from companies like Salesforce, Hormel Foods, and HP Inc. on deck. These results will give us critical insights into consumer trends and tech spending, key areas for our long-term strategies. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and make informed decisions. Taking a quick look at the past week's top large-cap gainers, Garmin led with a huge surge, likely on strong demand for its products. Shopify and AppLovin also posted double-digit gains, showing resilience in tech subsectors. These short-term winners might offer ideas for us to research further for our portfolios. On the flip side, weekly losers included Genuine Parts, which took a massive hit, alongside Rivian and Atlassian, both down significantly. These declines highlight areas of concern, but also potential value plays if fundamentals remain intact over the long haul. Sector-wise, industrials and consumer cyclicals outperformed over the past week, suggesting some rotation into value and reopening plays. Energy also saw a notable jump, likely tied to geopolitical risks keeping oil prices elevated. Meanwhile, healthcare and utilities lagged, reflecting defensive sectors taking a breather amid broader market jitters. These rotations are worth monitoring, but as long-term investors, we don't chase every weekly shift. Stick to your core thesis. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stay engaged with our daily summaries and in-depth SWOT analyses to keep your investment game sharp. We'll see you tomorrow for more insights to navigate these wild markets. Until then, invest smart and stay ahead of the curve.